Hello, this is Michael Daskalakis. Welcome to my video. Today I'm going to say why invest now in the stock market, or why this video is called that and why now is the best time for you to do it. But first I'm going to go over what you should invest in, why you should invest in it, and at the end of the video I'll tell you why now is the best time to invest. Now let's start with the general investing principles. You want to have about 6 months of expenses in short-term cash. It's called an emergency fund. After you get that, you want to start investing a percentage of every paycheck as opposed to keeping it in a savings account. Savings are minimal and checking earns you nothing. So you want to begin investing. Now, what should you invest in? There are two ways to invest your money: actively and passively. Actively is through a mutual fund, and passively is through mostly index funds. Index funds invest in markets as a whole as opposed to individual stocks. Now, a statistic is that an index fund, specifically the S&P 500, the Standard & Poor's 500, so the 500 best companies in America, beat actively invested funds 90% of the time. So if you want to be 90% of the time right, you should invest in an index fund. Now, the index funds I use are on Vanguard. They provide low cost, low fee, low expense ratio index funds, because even if an active investor or an active manager beats the market, they have trading fees and other costs that detract from your overall ROI, return on investment. Now, I like to follow the rules of Warren Buffett, who is one of the richest people on earth, and he recommends investing in index funds for the average investor. Again, because most investors can't beat the market. Now, just in the last year, the S&P has gone up 30%. So if you invested a year ago, you would have 30% more money. So what should you invest in? I recommend, and Warren Buffett recommends, the S&P 500 Index Fund. Now, this is available on Vanguard, which is the website I recommend you use. And this has gone up 30% last year, and on average it goes up about 10% every year if you look at its history. Warren Buffett recommends, at least for himself, to put 90%, or let me be specific, for his wife after he passes away, to put 90% in the S&P and 10% in short-term government bonds. Now, I don't recommend short-term government bonds because right now they're not earning that much. But I'll tell you where I recommend to put it. You should have a mixture between stocks and bonds. Bonds are safer, stocks are more risky, have higher returns. But an index fund is less risky than individual stocks because the index fund invests in all stocks in a specific market. So the S&P, or the total stock market of the United States, both have pretty high average returns, and you're investing diversified. And I'll tell you about more diversification a bit later on. So after you have to decide what percentage of your money you're going to put in stocks and what percentage in bonds. Now, in this video I'm not going to go over commodities like gold and silver. If you want to read more up on that, I suggest you Google Ray Dalio. He recommends commodities. In this video I'm going through the Warren Buffett method. You don't want to have money sitting around in your checking account. It earns you nothing. You don't want to have money sitting around your savings account. It earns you next to nothing. So you should invest your money. People recommend 15, 20, even 30% of every. Before you invest, you want to have an emergency fund. That is 6 months of expenses saved up in cash in case something happens. You have 6 months to live on. After that, you want to start investing about 20 to 30% of your paycheck. Now, at the end of the video, like I promised, I'm going to say why now, January 2020, is the best time to invest in your money. I think I said 19, but it's 2020 this year. So I actually went on Reddit and went on stock markets trend on the, stock markets thread, and I asked them, when is the best time to invest in an index fund? And the answer that kept coming up, and it's a quote that I'm going to say, is The best time to have invested in an index fund is yesterday, the second best time is today, and the third best time is tomorrow. Another thing I said is time in the market beats timing the market. Now my investments, I thought maybe I should invest in the next recession when stock prices are going to be lower than they are now. But I realized that I'm missing out on today's gains of, in the last year, 30% and overall 10% a year on average. So I'm going to repeat that. Time in the market beats timing the market. That means you want to invest and reinvest in the market periodically throughout the next 10, 20, 30 years, as opposed to investing when stock prices are low. Now if you're a stock picker investing in individual stocks, you want to look at the prices and daily fluctuations. But again, we're talking about passive investing, which for most people is the best type of investing. So that's it. You want to have your money earning for you, whether that be to draw out a little bit of income or a large amount of income depending on how much you invest, or whether you want to reinvest it and save for retirement or bigger purchases. Thank you.